Good afternoon from sunny South Africa here in Johannesburg, and thank you for the opportunity to share a little bit about what we at BankservAfrica is busy with in terms of launching a new regional payment scheme called TCIB, specifically focusing on a regional real-time payments cross-border system. In today's discussion, I would like to share a little bit around SADC itself, the South African Development Community, but also just to dwell a little bit on what TCIB is all about, and also then to dwell a little bit onto our experience in terms of launching and implementing a regionally based instant payment system. For context, and what does SADC mean? SADC, is, like I said, refers to the Southern African Development Community that's made up of 16 member countries situated in the Southern Africa on the continent. And as I said, there's been a lot of development over the past 5 to 6 years in terms of trying to find a way of establishing a payment service that can serve the community at large, in specific focusing on financial inclusion, financial deepening, and giving those people who most deserve it access to financial instruments to assist them in their daily lives. I think a good starting point is for us to sit and just reflect on, if I can ask you, how many times have you used your smartphone today? I think it comes so naturally to us while sitting here. I can imagine you busy with emails, busy on some social media chats, busy doing banking and payments in the background. So it's become so part of our daily lives. And for most of the residents within the Sub-Saharan Africa region, this is not a day-to-day occurrence. And having access through these smart devices to assist them with their daily lives is not a reality as where we stand today. What we have, however, seen in terms of the market is the movement towards digitalization, which tells us that the demand economy has arrived on the southern part of Africa, and we have been responding to that, and that's what I would like to share with yourselves. As a natural consequence, the market mobilizing themselves immediately, we've seen an inflow of service providers that's already providing services to the broader market to help them to drive or give them access to these services that they dearly need in their daily lives. If you look at the reality, and we look specifically at the broader SADC, and as reflected on screen, the 16 countries making up the SADC region, and we look specifically at remittances in terms of how the market plays itself out. Remittances are critical for many households in the SADC, as can be in some of the figures when we're currently measuring it in terms of as a percentage to GDP, and it's mostly predicated on flows from South Africa to the rest of SADC when it comes to remittances. The estimated market was around about 6.5 billion US dollars. Although it's seen a little bit of a decline, there was also a lot of movement during COVID, as people didn't have access to some of the mechanisms that they were used to, especially in the informal market. But the expectations is that this is a growing market, and it's growing at a rate of about 2%. The unfortunate situation that we're sitting with is that the corridors within SADC is quite expensive, and currently measuring around about 4.2 percentage points higher than the average that we see globally at the moment. The money transfer market dynamics that's playing itself out is quite important, and most importantly is the mobilization and the collaboration that we're seeing happening within within the continent. Quite a few, SADC took the initiative with the member countries getting around the table and commissioning the work around establishing cross-border retail payments, especially focused on low value. And all the regulators within that domain has been responding to the request and has been supportive in the drive, where we carry quite a high degree of support from the respective jurisdictions. The digital adoption we've quickly touched on is quite important. There's an uptake. We're sitting with a younger community that is quite prone to using the more digital channels. But nevertheless, there is still a high degree of cash that's doing the rounds and is still, in most cases, seen as the preferred method of moving money across the borders. Pricing pressures, as we all understand it, is there. And it's forcing us to think differently about when delivering payment services to the broader market. The drive for financial inclusion is very important and close to our hearts, and is ultimately the driving force behind what we do. Just a little bit of statistics, and I think just to draw the focus back on the specific task at hand. If we look on average, we look at around about, just using South Africa as an example, in the inflows and outflows, we can still see that we're recording some high percentages in terms of the cost and the pricing to send money across the border. Just reflected in this example, we can go up to 11.5% when it's cash to cash, can go as low as 5.2%, but on average sitting around about 8%. And if we compare that to the objectives that's been set around 3%, there's still a lot of work that we need to do within the SADC region. Most importantly, like I've mentioned a bit earlier, still a high degree of use in cash-to-cash payments, with the estimations in the market around about still 2/3 of the payments flows going across border still being in the informal markets, in other words, being transferred through alternative methods through cash. We've also seen quite a dramatic movement, which we're ecstatic about on a broader continent, where in 2017 there was only 2 instant payment systems that was launched across the continent, where we're at today around about 27 instant payment systems that's been established in some stage of implementation and scaling. Most of these systems still find it quite difficult to scale, and there's quite a few reasons that's contributing at the end of the day to the situation. But we see different forms of instant payment systems seeing the light, some of them being banking orientated, some of them being mobile orientated, but also some of them that is already cross-domain, inviting all participants from both the banking and the non-banking fraternity. The big question that is still out there is in terms of how do we establish broad-based interoperability, and how do we get all these systems to actually interact with each other. We also saw 3 regionally based offerings seeing the light, of which TCIB is one of them, and there's also another 2 that is also in establishment and implementation phase at the moment. And that is a reflection on the collaboration that's happening within regional context on a continent at the moment. Establishing any regional inclusive instant payment system, we have to solve for very specific hurdles. It's not unknown. I think as a starting point, the transaction value, which is normally quite low. We're talking on average around about $55 value transactions. The market size in itself and its geographical reach is also a critical consideration that always needs to be considered. Broad-based access is probably the biggest challenge that we're facing at the moment. And how do we best provide access to the consumers at large? The infrastructure limitations is well known. Infrastructure in the continent and as well as in the SADC region is not as well developed and established as we would like it. But nevertheless, that's the realities that we have to solve for. And I think it's important that we always keep in mind what these macro factors are. Because although, as we've seen in some of the examples that we've used, there's cross-border remittances is not a new phenomena. There's a lot of payment service providers providing excellent services to the community at large. The biggest problem that we're facing at the moment, and it's mostly driven because of the accessibility problems, is that every single provider can't serve a broader community. And it's always done within more closed-loop arrangements between the alternative payment service providers. And I think that's where the call of action, and that's where our bottom line comes in. It's about how do we establish broad-based interoperability for the region. And our role in specific in that is to serve as an enabler for this interoperable network for all payment services. So we've got a standard definition around inclusive instant payments, which we believe drives broad-based interoperability, which supports economic success and growth. But we like to add that extra I in, which talk about the interoperability. And the question is asked quite oftenly, do you compete within this established market, or do you enable and support the existing market to become interoperable and act through that interoperable network, access those markets that doesn't have access at this stage? So if we dwell a little bit on TCIB, this has been a long journey. Started out in 2050, where the central bank governors of SADC got around a table and asked for a cross-border retail payment system to be established, with the specific aim around driving financial inclusion and deepening and providing that broad-based access to these services, to the markets. It was quite an elaborative journey. We're starting out with BankservAfrica and our capacity as the operator, and evolved, and through the design got an establishment. Bankserv also then took up an extended role to also oversee and implement the scheme, and working closely with the regulators to make a success and taking it to market. We were quite ecstatic. We formally went into the market in November 2021 with our first two inaugural active participants, one situated in Namibia and one situated in Zimbabwe. And what made it unique and quite special for us was that we've proved the use case that we can establish interoperability on a cross-domain basis. In other words, we were able to successfully do cross-border payments between a non-bank and a bank, and being able to settle those transactions. If we look at TCIB, and ultimately the longer version of it, transactions cleared on an immediate basis, is an interoperable payment solution that enables instant cross-border transfers between any two TCIB participants, banks and non-banks, and that gives it the sort of cross-domain dynamic anywhere in the SADC region and soon beyond. TCIB drivers, that's quite important, is when we have to address those common challenges that in the international money transfer market is quite well known in terms of speed. We had to make sure that we do this as quickly as possible. Currently, we're doing it as close as possible in real time to just adhere to all the compliance requirements. And we're driving a SLA of 60 seconds for money to be made available to the recipient. Focusing on low value, almost micro payments, in very specific to enter a low risk profile of payments. With the ultimate aim, as I already shared, is meant to provide these services at the lowest possible cost, given that we're dealing with very low denominations in that regard. But a big focus on us being able to handle the high volumes that's associated within the market, and also to stand up a multi-currency solution. Being that we're offering the service on the regional basis, we also have to then deal with the 16 local currencies represented by the member states. Fully interoperable between banks, non-banks, and cross-domain enabled with a dynamic participation model. We had to cater for quite a diverse market, being cross-domain, and henceforth we had to provide for a flexible participation model to allow different modes of access into the payment service. We all terminate this over a single infrastructure, assisting us to with the economies of scale calculations, with all these transactions aimed to be processed over a single infrastructure. Mostly important, although initiated from a regulatory from the regulatory domain, the scheme that's been established is ultimately member-led, and we've created and implemented a cooperative scheme for members to get around the table and collaborate in terms of offering these services to the broader market. Just in terms of the formalities, one of the key tasks that we've completed just before we went live was to establish the necessary scheme frameworks to provide the community at large across 16 jurisdictions with the regulatory certainty and legal certainty, but also in terms of clarity around the operating model and at any given time, who's responsible for what elements, and to make sure that we can serve the broader community that spans across 16 markets. If we look at some of the key system features, pretty much based on modern standards, messaging standards, ISO 20022, also being able to facilitate the compliance requirements that is high up on the agenda these days. It allows for open loop as well as closed loop corridors. Building a network in a cross-domain environment across 16 markets requires a little bit of flexibility in terms of building trust amongst the members over time. And hence why we've catered for a level of flexibility where you can create sub-networks within the broader network, but with the ultimate aim for all these sub-networks to start interoperating over time as we establish trust within the model. Multi-currency, as I've already discussed, intraday settlement enabled. We do deferred settlement through a centralized system operated by the South African Reserve Bank. So we settle directly into the RTGS from that perspective. Fully regulated payment scheme with full endorsement from the respective regulators from the different countries. If we just look at the customer journey, typically the aim is to move money from one country to another, that being done through either digital or cash-in mechanisms, ultimately terminating on a recognized store of value held by either banks, the MNOs, the MTOs, or even the retailers, being cleared and settled, cleared first of all, and then ultimately settled through the core system to terminate in the specific country through the choice of channel and store of value that is being selected. And like I said earlier, the big proof point for us was to enable the main use cases, which was around focused on person-to-person remittances, but ultimately being able to facilitate them, whether from bank to bank, bank to wallet, wallet to bank, or wallet to wallet. At the end of the day, we're all open to all of those transactions, and that all happening within 60 seconds. Just in summary, it's a regulatory endorsed scheme with oversight through the SADC Payment System Oversight Committee, ultimately advancing the public good objectives. We implemented an authentic governance framework, which is member-led and cooperative, where members actually decide on the direction and the development of the services within the scheme, but also to foster that culture of collaboration between the members from different sectors at the end of the day. Building up to a compelling value proposition. The minimum viable product that we've taken to market was the P2P remittance low value use case that was taken to market, and working with our members to actually develop that to suit a diverse set of needs. Being cross-domain, there's quite a few different needs and classes of transactions that's required from the different entities. A central hosted operation is quite important. Terminating these volumes over a single infrastructure helps us with driving the cost down, with the commercial model of the scheme predicated on us driving the cost of a transaction as low as possible at the end of the day. Where we're at today, and we're quite proud of, we were able to sign members up across 11 countries of the total of 16 countries where we stand today. And that is split up between 18 banks and 16 non-banks. We've activated 4 corridors as we stand, and with another 12 corridors planned for October to go live, which will give us 16 different corridors and flows available to move money. Ultimately, gearing towards building a growing payments network for Africa by Africa, and ultimately having the ability to, through this network, affect the change that we all desire in terms of reaching the right people at the right speed and at the right cost, and naturally doing that in a safe, regulated manner. It's not always been easy. There's been quite a few lessons learned. We won't profess that we have all the answers. We've learned quite a bit. First lesson learned, being a regional offering, is how to deal with the complexity. Like we said, in 16 countries, that represents a possibility of 240 corridors. That's possible. And also delivering these services across multiple jurisdictions in a cross-domain fashion introduces quite a bit of complexity that we have to deal with. The diverse market needs that I've mentioned a bit earlier, especially introduced through the cross-domain nature, so serving both the more formal banking environment as well as the non-banking fraternity that is also being allowed. The regulatory hurdles and supports is natural, dealing with the 16 jurisdictions. Technology skills and capabilities. There's a lot of new players in the market that needs to still mature in terms of their practices and their available capabilities. Market readiness, in terms of what we're seeing playing out, is the time to actually onboard and activate participants. Takes a little bit more time, but that's mostly driven through the readiness. A lot of the new players are not as accustomed to the cross-border world than what we would have liked. Establishing the end-to-end points in the network, and it's ultimately the activation of corridors. That's ultimately what the network is built on. You have to take a very deliberate approach in terms of how to deal with that. In principle, how we're responding to that is in-country mobilization activities is quite high up in the agenda. Spend a lot of time within the respective markets to understand them and to actually see how we can best support the market in actually getting commercial value out of the use of the network that we're establishing. Collaboration forums, we were built on the metaphor of collaboration, and we are constantly busy educating and supporting stakeholders out there in the region to be able to support our participants. Commercial model, we keep on adapting the commercial model to be in line with what the market is accustomed to. Stronger market presence, as well as enhancing our value-added services, is high up on the agenda in terms of making sure we can keep up with the market and produce fit-for-purpose services that is required within the market. New ways of joining, we're constantly exploring how we can make the journey easier through smart access and also different configurations of access through the local ACHs or through payment service providers that's already in existence within that. We're taking a very structured approach to how we approach the market. We're following where the need is most pressing, and that's normally driven in the corridors where there's existing flows that we can capitalize on, specifically focusing on South Africa to some of the other SADC countries as a starting point, and then to build a network out from there. And whilst we're doing it, then learning from the market in terms of need, and then to stand up the fit-for-purpose services that is required. Here's just an example in terms of how we're approaching and following the market in terms of driving adoption and use, and making sure that we invoke the right level of services at the right with the right feature sets to ensure that the market can actually get the necessary value from that. Just in terms of our journey, as I mentioned earlier, started out on the P2P journey, busy with the establishing the B2 business to person users, and then ultimately where we would like to be is then to get into the personal to business, which we believe is a great catalyst, because it also starts invoking some of the trade requirements that we see within the small medium enterprise market segment. Real-time cross-border payments, first of all, in a flexible manner, in a secure way, and an interoperable and affordable and trusted model, which is quite important and close to our hearts. I'll leave you with a little bit of a proverb that we live by on a daily basis. And as we shared with you, the journey is a difficult journey. But there's a few considerations that we keep on learning from the broader market, and it's probably summed up with the following. If you want to go fast, go alone. If you want to go far, go together. And that's the ethos in terms of being the enabler and getting the financial institutions that is providing these necessary services into a like-minded network to provide these services and reach a much broader market segment than what we are doing today. Thank you very much, and I hope you have a wonderful conference, and thank you for the opportunity for me sharing a little bit about TCIB and the work that we're doing within the broader Southern African development community. Thank you.